Hey everybody, it's Steve Verrier here at Caliber Home Loans Incorporated in Palm Coast. It's time for your weekend tips. And this weekend I put together what I call the Dirty Dozen. This is the list of the top 12 items you should not do when you're obtaining financing, okay? Number one, don't quit your job. Just before closing, we have to call your employer to verify your employment. Make sure you're still there. If you're not, that's a problem, right? Number two, don't buy or lease a new car, because we have to do a soft credit pull prior to closing. And if you've taken on new debt or if you've purchased a new vehicle, that will be revealed during the soft credit pull, could jeopardize your pre-approval. Don't go maxing out any of your credit cards. If you raise the balances on your credit cards, you raise the payments. And when we look at your credit report again, those higher payments could jeopardize your pre-approval as well. You don't want to allow late collections to show up on your credit report. For instance, you go to the doctor's office 4 months before and something happens, you didn't pay them or they didn't get paid by your insurance company. Next thing you know, the collection pops up on your report, could cost you 30 to 40 points and your pre-approval. Next, don't spend the money you set aside for your closing costs. Believe it or not, this does happen in our industry, so don't do that. Number six, don't omit any liabilities from our knowledge. Tell us about your child care costs, any private land payments or things of that nature, because eventually these will come out and it's much better if we know about them up front. We can address them a lot sooner. Number seven, don't go buying any major appliances or furniture a day or two or a week before the closing, because you just might enjoy that furniture in your apartment. Okay, just telling you folks, don't go doing that. Don't go applying for more credit, because every time you do that, that credit pull could cost you points on your credit, jeopardize your pre-approval. Number nine, don't make any large cash deposits into your banking accounts unless you have a bill of sale or absolute proof documentation where it came from. Cash is a no-no in the money lending business. So you definitely want to make sure all funds can be sourced. We have to know where they came from. Don't go transferring funds around from one bank account to another. Guys, this just simply makes our job a lot more complicated. It means we must get statements from everywhere proving where all that money came from and what it was for. Don't switch banks. Things are much simpler if you just stick with one bank, and we really like to keep it simple and keep it, what's the word? KISS, right? Keep it simple. Don't co-sign for anything. Guys, what a lot of people don't realize is when you co-sign for something, you are making yourself responsible for that debt. And in some cases, we can offset that, or we can prove that you're not responsible for it, but it's just a better idea to be very careful when you're co-signing for people, all right? I mean, we may still have to count those payments against you, especially if it's less than 12 months. A lot of times, if it's over 12 months, we can get rid of it, but you're better off talking to your loan officer before you go and do anything like that. Guys, as always, if you have any questions about these types of things or any other mortgage topic, talk is cheap. Pick up the phone, give me a call, 904-514-8884. I'd love to hear from you. Have a great weekend.